So what's up guys, this is a guide to technical analysis as a forex trading beginner. So the first thing to look out for as a beginner whenever I open any chart at all is what is the trend of the market. So currently there are three types of trend in the market: the uptrend, the downtrend, and the sideways trend. So the uptrend is simply trends or movements in the market that goes to the upside. The downtrend is simply trends or movements in the market that goes to the downside. So looking at this chart right now, what trend can you say it is, guys? It's definitely going to be an uptrend because you can see that price has been moving all the way to the upside. So for an uptrend, you're only meant to enter buy trades or long positions. And where do we enter these buy trades or long positions? We enter them at support zones or previous resistance that on support, or structural levels or levels of support and resistance in general. Now for your direction and your market bias, the best time frame to use for this is the 4-hour time frame. So the 4-hour time frame that we're currently on right now, looking at the direction of the market, so we can clearly tell that the market is currently in an uptrend. That's the first thing you have to do. Now secondly, you have to mark out the structural zones or levels of support and resistance, which I've done right now. So you can literally see that price has been respecting these levels, using the levels as support, which you can see reactions like this as support. You also can see reactions like this, and all these reactions here as support, or levels of resistance. We can see this is a reaction of resistance, a resistance reaction, a resistance reaction. We also have multiple support reactions. So these levels are the levels that we eventually look to enter the market from. Once price has gotten to those levels, we wait for our confirmations and then we take trades based on the direction of the trend. So in this case, we're going to take only buy trades when markets gets to any of these levels. So after marking up your structural levels on the 4-hour time frame or levels of support and resistance, you can now come down to the 1-hour time frame to actually know the structure of the market. So typically for an uptrend, we have higher highs and higher lows. It goes to the upside, higher highs and higher lows. So the best place to enter the market is at a higher low that's currently on a support level or a previous resistance level that has found supports now, and which you can see happens a lot of the times. Now for this level we have right here, you can see this one single level has acted as support, resistance here, and if you come all the way to this side, you can see that it literally acted as support multiple times here before market was able to buy all the way to the upside. The same thing can be said about this level. You can see this level previously acted as resistance here. We also have another resistance here. We can see market breaking above the resistance zone. Then once that happens, that level becomes a level of support. You can see market coming back to that level, reacting as support, and then buying to the upside. Now, if you need me to put you through on how to do proper technical analysis as a forex trading beginner, ensure you register and sign up for my 10K weekend forex bootcamp. Now, this bootcamp is meant for beginners, that's people with no previous knowledge in forex trading. So we started from the basic up to how to mark out the support and resistance levels, up to how to take trades and calculate your risk management and lot size. So if you're interested in that package, in just 10,000 naira, we have classes on Saturdays and on Sundays for 3 hours each. So if you're interested in that, just comment bootcamp. Make sure you like the video and follow my page, and I'll be able to DM you and we'll talk about it. With that being said, that comes to the end of today's video. Do have a lovely, a safe, and an amazing day. Goodbye, everybody.